Hello everyone, I'm Brandon Garrett with Ben Oak Capital with this month's market update. In the video, we'll be talking about some major events over the last month and what we're seeing for the future. Please stay tuned at the end of this video for a required disclosure statement. The calendar had barely flipped to 2022 and investors were reminded that even attractive long-term stock returns come with a cost: volatility. The S&P 500 index fell nearly 10% from January 3rd through January 27th amid fears that the Fed will have to get a lot more aggressive to fight inflation, before staging a 4% rally over the last 2 days of the month to end January down 5%, with more volatility throughout February. After such a steady march higher in 2021, the dip may have caught some investors off guard. For those whose anxiety levels may have risen a bit over the last few weeks, here are some numbers that may provide reassurance. Even in positive years for the S&P 500, on average, the index experiences a maximum peak-to-trough decline of 11%. This year's max drawdown is now approximately 10%, or what we call correction territory. After a correction of 10 to 15%, the index has experienced an average one-year gain off the lows of 22% and has risen in 12 of the 13 one-year periods after. The average stock market gain 1 year after the first Fed rate hike of an economic cycle has been 11%, with gains the past 8 cycles dating back to 1983. When investor sentiment is most negative, as it has been the past several weeks based on investment sentiment surveys, stocks have risen an average of 11% in the next year. This data argues that stock investors should stay the course. But remember that gains in 2022 will likely be tougher to come by than in 2021. They may be more modest and happen later in the year, as is typical during midterm election years. The good news is that an inflation peak may be near as the COVID-19 Omicron variant loses its punch. Slower but still solid economic growth this year will help cool inflation as Fed rate hikes take hold. We're already seeing backlogs and bottlenecks start to clear. We expect more people to jump back into the labor force later this year, easing wage pressures. These uncertainties make the road ahead for stocks tougher. But with U.S. consumers and businesses in excellent shape, the U.S. economy may grow 4% this year, well above the pace of the last decade. Corporate America is showing once again during fourth quarter earnings season that it is thriving, with S&P 500 earnings poised to increase by more than 25% year over year. That's it for this month's video. If you have any questions about what we discussed, please give us a call. We'd be happy to talk to you.